Welcome to the Game Plan. My name is Gareth Soloway, coming to you live from the verifiedinvesting.com studios. We're going to cover all the charts of action today. We have earnings from the banks being reported. We have action in the markets. Markets are actually selling off, which is actually very interesting, and we're going to cover that. So lots to go over. Let's get right into the action. He almost caught it. Almost caught it. All right, guys. Into where we go. And so let's look at what we have here, right? So right off the bat, I always start here. We go to our market blast, and we look at the data on the market blast. Let's see what we got here. So as we scroll down, we can see the key headlines for the day. JP Morgan Chase beats earnings, but the stock is falling over 2.5%. It's actually moving a little bit lower. We're going to look at the chart. I have a technical level potentially that I might be looking at for a day trade today. I'll share that with you. And also there's a bigger breakdown here at work. And again, to me, JP Morgan was one of the last big name stocks that's looked at as being a major component of the market, and it might be breaking down today. So this, if it does happen, increases my bearish view on the overall markets and a potential decline coming over the next couple months. Okay, next up, Wells Fargo. Citigroup reported positive results after earnings. Generally, they were good, but again, they had a little bit of here and there, mediocre stuff. Ultimately, these stocks, if you look at any of these stocks, JP Morgan, Citigroup, Wells Fargo, they've all been trading at near all-time highs or 52-week highs. And so when you trade at all-time highs going into earnings, it's very hard. Like, you have to knock the cover off the ball to make sure that your stock is going to go up even more when you're trading at all-time highs. And I think that was one of the things going into JP Morgan's earnings that had me kind of aware of, like, this could be a sell-off here on earnings, any sort of mediocreness, and sure enough, we got that. BlackRock, on the other hand, was not trading at all-time highs or 52-week highs, and that stock actually did very, very well on earnings. A lot of new money under management, and again, their guidance and earnings were very solid. Intel and AMD falling pre-market after China continues to talk and move towards diversification, getting rid of chips that are coming from other countries and looking to domestic chips. And again, this is even something that not a lot of people are talking about. I've talked about how the competition for AI chips is going to just be mounting more and more. Intel just recently reported a new chip or came to light of a new chip, and their chip is 1.5 times faster than NVIDIA's chips. So you're having this competition come, but then you also have these other factors going into other countries saying, listen, we don't want to have other chips from other countries because of the potential espionage aspect or spying or taking information type stuff. So we're going to move towards domestic producers. And that, again, is going to be another kind of hurdle that a lot of these AI companies are going to have to get over in the next couple years. All right, lastly, I think this is just an interesting one. One of the biggest bulls on Tesla has been Dan Ives, right? One of the biggest bulls. Like, I remember when I was bearish on the stock and it was trading at all-time highs, and even when it was off of those all-time highs, he was always bullish. And I'm just like, man, this guy's always bullish. Well, finally, Dan Ives says he's nearing the point of giving up on the stock. And he basically says, listen, if they don't show me something soon, I'm going to have to basically jump ship on being a bull on this stock. Even saying the robo-taxi is not the answer in the near term. Now, for me, I'm a contrarian, right? So when he was uber bullish at the highs, I was kind of more bearish. And now it makes me wonder if we're setting up for a move up. Now, I want to be clear. I still think ultimately when we do hit a recession, which is inevitable, like whether it's this year, next year, or the next year after that, the U.S. will have a recession. There will be one at some point in the future. I guarantee that. But ultimately, the question is do we get a bounce before it heads lower? So I actually agree it will go lower. The question is, do we get a bounce first and foremost? All right, we're going to look at all these charts, but we have to find out who wins that 1 year of NordVPN. So let's go right into it. See who wins today's drawing from all those amazing comments that you guys left underneath Verified Investing. Remember, you have to be following Verified Investing on YouTube or on Twitter to qualify. Today, Steve-GN4HK. You win a year free of NordVPN. Congratulations, buddy. That is amazing. And again, we'll be spinning the wheel in just a second to see who is going to win the next prize or find out what the prize is, essentially. Okay, into the chart action here. So we got to go look at JP Morgan. So JP Morgan reported earnings. You can see the drop pre-market had a big bounce, but it's trending back towards the lows of the day. Now, I want to show you this, right? So here's your JP Morgan chart, one of the most incredible bull runs. Like, generally, financial stocks don't look like technology stocks. When I look at this chart, right, I'm looking at this chart, I'm like, wow, what is this? Is this NVIDIA's chart? Is this, a big cap tech? Is this, an exciting new technology company? And the answer is no, it's just JP Morgan Chase. Now listen, great franchise, great name, great profitability. Jamie Dimon is a visionary in his field. But I will say that this chart was a little too vertical. All-time highs right up here. It started to stall out just a little bit. Not a surprise to me that it's coming down. Priced for perfection right here. And their guidance, JP Morgan's guidance, their interest income, they actually guided lower on that. And that was a disappointment to Wall Street. So what do we see here? So the stock, again, if we flip back to the intraday, we see that the intraday is trading here right around this 188.70 level. So we know that. We go back to our daily chart and we say, what's below this level that might be of interest in terms of technical support today? So we go down, I see a little pivot here, but we're below that, we're below that. Now we get down into this level here. So here is a little bit of a technical, and these are, by the way, this would be potentially day tradable, but again, I can't guarantee that even I'll day trade this level because I watch it real time when the market opens, and I have to decide at that point. But what I see right here is you have this area here, right through this low, this low, this low here, and right to here. So that gives me a level where there should be some support right around 186.50, give or take, 186 to 186.50. All right, what about secondary level? Let's just say this stock continues lower, which, by the way, when it's trading at all-time highs, it very well could. What would be our next level? I'm seeing a level right here. Let's bring that trend line down here. In addition, I also want to zoom out and just see if there's anything in the past here. So what do we have here? That's 172. That's even further down. That's more of a swing trade downside target. So to me, it's looking more and more like if we're looking at a level here, the next level would be right around 180, 183.50, I think, for me. So you see this flat line right here where it was kind of chart went up, sideways, and then we finally broke above and we started on our next wave up. That to me looks like a little bit of support right around 183.50 to 183.60. So those would be your two levels to watch. Now, we got to talk bigger picture here because what I said to you guys at the beginning of this show was that to me, you look at NVIDIA, it had that mega reversal engulfing candle like a month ago, even maybe a little bit more than a month ago. Since then, it has not gotten above that level. Apple, yeah, it had a great bounce yesterday, but it's way off of its December all-time highs. More and more of these name brands that are basically the drivers that are looked at as being the kings of the castle, if you will, they have started to break down. One stock that hadn't broken down yet was JP Morgan Chase. So if we look at this, I want to show you this, guys. If we look back at this low, going back to the October low, look at that upswing. Now let's start connecting trend lines. Let's play connect the dots, essentially. So what we do is we take that low, we connect it right through this area here. We see it goes right through this area, and look at what we get. So check that out. All right, so here's a trend line that if we look at the levels, it's a very obvious level, right? Like over and over. Even yesterday, we closed right on the line. Now, this was yesterday. Today, technically, we're trading much below. We're at 188, right? So we're all the way down here now. If we close down below this trend line and we confirm on Monday, then I think you can say that now JP Morgan has now fallen over like some of these other big names that have been the leaders of the market. And it's almost like a domino, right? It's a domino effect. One falls, then the next fall, then the next fall. Once you get to a certain level of falls of these major names, the market will have almost no chance of holding up. Now, if we go to the S&P 500, we know that that's what the charts are probability-wise showing us, right? So if we jump over to the Spiders daily chart, I mean, again, I've walked you through this for a long time, right? I mean, we started talking about this when we were like over here. We kept on watching it. Finally, we got the breakdown. And again, now we're still watching, right? So you have broken down and it's confirmed. So the S&P has confirmed a breakdown. Even though you're not going to find this on mainstream media, guys. They're not going to talk about it. In fact, most people don't have the guts to make these type of calls, whether they see it in the charts or not. A lot of people don't even know how to read charts out there. But the point is that this has now been confirmed. We now need to see a break of this low to set the next sell-off in progress. And again, that level is something I'll be watching. Now, today on the S&P 500, we had a good rally yesterday. I think the S&P was up about 0.75%. But if we look at today's price action and we go to the intraday, look at the sell-off. Like, look at this drop here. This is pre-market, by the way. This is yesterday after hours. This is this morning. This is a big drop back to 513.81. Now, the reason why this is important, guys, I'm going to zoom out. I want to show you this, is that if we zoom out, we have a key market level here, and I have to go back a ways to that Thursday high. Now, I'm showing the pre-market data on here, so it seems like it goes back really far, but it's just a lot of pre-markets and aftermarkets. But remember that last Thursday drop that was on massive volume? And I've talked about this, how important this drop was to me. But if you look at that drop, look at what's going on here. We keep on getting right down to these levels, and we're holding right around 512, give or take. And so I'm curious, we're starting to get close. Like when this line breaks and confirms on an intraday basis or closes below on a daily, I think this is the next big layer to the downside. And we're giving up all those gains from yesterday at this point, or a majority of them. And so this is a market that is starting to see a sell the rip environment, meaning that the pops are being sold into. And again, all you have to do is go back and look at that daily chart and that breakdown there. And look, I mean, amazing when you zoom out on it. But this, once we got through this and we got below here, that's where it's a sell the rip market, in my opinion. Now, in the beginning, a sell the rip market, you still get a lot of buy the dippers, right? I mean, the buy the dippers will still be buying in the next few months even. So you're going to get big bounces. As I've said, remember, when markets top out, they don't, like a market doesn't go like this. Let me draw this on the screen here. Like a market doesn't go in a bull mode and then just go like that. I mean, unless you have like a catastrophic black swan event. But what markets generally do, the way they top here, is they go up like this for long periods, which is like this, and then you get little pullbacks, and then the buy the dippers push us up. We make a lower high, and then you get another rollover, and the buy the dippers push us up, and then you start to get deeper and deeper until the very end. Excuse me. So that's really more how, and it's not pretty the way I drew it, obviously. I'm not an artist here, but that's more the way that markets end. And then when you get the final flush out, this is actually where you buy. Once everyone's panicking and no one's buying the dip and the flush really just keeps going and going in a straight line, it's when things are the scariest that's when you actually have to, or you're supposed to, stand up and buy. Okay, so we've talked about JP Morgan Chase. We've talked about Citigroup, Wells Fargo. They're not big movers, at least as of now, give or take a little bit on the charts. BlackRock was up a little. Not a big enough move on BlackRock to be of interest to me either. Let me just scan through. Is there anything else? Oh, so there is a trading idea that I want to bring to your attention here, guys. Let me see if I can find it. Okay, so this is what I would call a pairs trade. And a pairs trade to me is a trade that protects you in some ways, but also can give forth profits. Now, this is a pairs trade that I've been contemplating here on GE versus Boeing, okay? So what I want to show you is this is the start of 2024. Both stocks. Look at how they are inverse to each other. As GE has gone up, this one, Boeing, has continued down. Now, GE split off all of the other companies at this point and is now called GE Aerospace. What is Boeing? It's an aerospace company. So as Boeing struggles, we've been seeing money flow come from Boeing, and Boeing goes down because money is being pulled out, and it's going into GE. So the pairs trade is this. And again, it's just a thought that I've had in my head. You know, whether or not I even act on it, I'm not even sure at this point. But my goal is to give you guys information and insights, and you guys obviously make your own decisions. But the idea is that if you short GE and you buy Boeing, you potentially make double the money if the reversion trade does occur. So if Boeing bounces, then in theory, GE should pull back. Money flow should come from GE and go into Boeing. Now, if the market just collapses, right? So let's just say the market collapses and there's all-out panic. Well, then GE probably goes down and so does Boeing, right? So Boeing would go down and GE would go down. Well, if you're short GE but you're long Boeing, they cancel each other out in theory, right? So they're both going down. You're long one, short the other. They cancel each other out. If, on the other hand, let's say the markets continue to rally. Let's say they both go up. Well, same thing. You're protecting yourself a little bit because you're long one and short the other one, so they cancel each other out. So the idea is that in a weird way, it's a thought, a type of trade that's kind of, to me at least, intriguing, because ultimately, if everything works out, this one should pull back, this one should bounce at some point, and I can make double the money when that happens. But if something happens where the markets just rip or collapse, then they cancel each other out. Anyways, just an idea that I was kind of contemplating there. You guys can kind of think about it on your own and decide, again, what you are interested in or not. Okay, let's spin the wheel. Let's do a little spin of the wheel here as we get into it. Let's see what we are going to be giving away today. Let's rock and roll here. And what can it land on? And again, I'll give you guys the question. Oh, ho, ho. Winning Trader Series. That's cool, guys. That's 5. I think on the website right now it's $10,000. So that's pretty cool. I'm glad it landed on that. Interestingly enough, I think it was last Friday when we gave it away because it hadn't landed on it. Now it lands on it, and we're going to do it again. So at the end of this stream, stay tuned. I will give you guys the question where you have to post below the verified investing on YouTube or on Twitter. The reason we do that, folks, that's the way we pull all of you guys into the lottery. So from those names. And just a reminder for earlier, make sure if you win, you email lawton@verifiedinvesting.com. So again, lawton@verifiedinvesting.com. All right, so that's cool, guys. I'm excited about that. I will make sure, and if not, Lawton, come out and yell at me for not asking a question at the end before I get off of here. All right, so let's get right into Bitcoin. So Bitcoin is not doing a whole lot this morning. It hasn't been doing a whole lot. I almost feel like a broken record here, so I'm not going to spend a lot of time on this. But basically, you're hovering below your all-time high and above this trend line. As I said, as long as we don't get below this line and confirm, neutral to positive bias with potential upside in Bitcoin. If we get below this line, it would be a warning sign. If we confirm, you should honestly have a bigger pullback there. That would be a huge break of a trend line right there. Okay, next up, let's take a look. I wanted to show INJ here. Look at, this is one I highlighted recently, guys. So INJ is a crypto. Many of you guys have probably heard of it. But look at this trend line here and look at the break point. So if we look at this, we had this little level here. Bear with me here as I get my drawing up. So this pivot low right in here, right? So we go there, to here, to here. Look at all these hits. And remember, the more times you hit a door, the weaker that door becomes before it breaks down. And so eventually what happens, you break down. Notice here how you confirmed, retraced to the scene of the crime, and then it's starting to move lower. So if you're looking at this is not a good chart. This would be a bearish chart. It's broken below the level. Like basically, if you compare this to Bitcoin, this would be that line on Bitcoin. So now that this is broken below, it likely is headed much lower. You'll have a little bit of support right at this pivot point here, which is, I think, is around 27 to 28. But ultimately, this could be headed down here. This will be the huge area. This will be a lot of support right in this zone. But this is all the way below 20 bucks. And again, one of the interesting things here, a lot of these altcoins, not so much Ethereum. Ethereum is kind of like the champ of the altcoins. But a lot of these altcoins are looking very, very bearish while Bitcoin holds up. And again, is this a Bitcoin dominance type of thing? Maybe it's going to continue up on Bitcoin dominance, and that could be what it's telling us. But the altcoins do not look healthy right now, a majority of them. Not everyone, but a majority of them. Looking at gold real quick, gold just continues to rip. I thought it would pull back a little bit before going to my ultimate yearly high of $2,540 but this is just a rock star here. I mean, gold is just seeing tons of upside, up again today. This is a new level I did discover. I just want to show it to you. I'll erase the other one so we keep it as clean as possible. But basically, if we look at a trend line here, right? So this is a new trend line. This is where we could see a little bit more resistance. We have all of these kind of pivot points right through here, and then right to this top. And this is around, I think it's around 2440, 2450, right around there. So we're actually getting kind of close to that. Currently trading right around 2400 or just below. But it looks like that would be your next chance at a pullback on gold. But remember, guys, pullbacks for me are buying opportunities. You give me a good pullback, I'm buying gold miners, all of these things, as I still think it's going to above 2500 before year end. Now, crazy enough, 2500 is only about $100 away. Incredible move. Like, again, for those of you that are new to gold, this doesn't happen very often in the cycles of gold. You get this once every decade maybe or so, maybe every 20 years. But it is a move that gold bugs have been anticipating because of the U.S. debt, because of the inflation, because of the problems of printing money. You know, again, all currencies out there are being printed. Every central bank, Japan, the European Union, U.S., they're all printing money to central banks. So gold is not. I mean, gold is mined, but it costs money to mine, just like Bitcoin does. And so again, gold should be going up with inflation and with printing of money and with debt risk, and that's what we're seeing here finally play out to the upside. Okay, a couple other charts here. Commodities, guys. Commodities are just hot, hot, hot. Look at silver here. Now, silver is getting to a level where I might take a stab at a short, right? We've talked about this upside target of $30 right up here. We are getting very, very close. We're at 923 right now. Again, we get to 930, it would just be a quick short, a quick pullback, and then I would look to buy the dip again on silver. So silver, again, same kind of thing. You're not going to find me with many commodities that I'm saying, hey, I like it shorter, longer term. The only thing I would say is maybe like oil, because I think the U.S., once it's discovered that the U.S. the economy is suffering, then I think oil could potentially drop to 50 bucks or so a barrel. But aside from this, the metals, the food, the agricultural stuff, to be honest, the cost of labor is just going up. And so they're going to have to raise prices on those. Those prices will have to go up or people won't be able to produce that stuff. Speaking of oil getting a bounce today, we have talked about the bullish consolidation here, so we'll see if this is the next move up. Is it possible oil could go to $100 a barrel before it has that big dip? Anything is possible, guys. So just be aware. We confirmed above this level, bullish consolidation. Right now, the short-term bias, even if my longer-term bias is down, my short-term bias is still bullish on oil here to the upside. Next up, let's take a look at natural gas. Natural gas continuing to kind of stall here. Had a pullback yesterday after inventories. Again, a lot of sideways chop. To me, that's okay. All right, so again, you have this line here, right? And we have kind of this level down here, and that's inside of this, right? So you could almost make a case that maybe you're forming a bullish pattern here of chop up to the upside in here. But essentially, the idea is we want to see, I'd rather not see this low taken out, and we'll want to see a breakout like that, and you'd see natural gas to the upside. All right. Just a couple other charts to show. Take a look at platinum. Platinum's finally starting to rip higher here. If we look at the chart on platinum, big wedge pattern. It has not broken out yet like silver or like gold, but you do have a major level at around 1025, and it is getting close to that level. Big up move in platinum. And again, guys, these are every day on these streams, on these game plans, we're seeing commodities just go higher and higher and higher, and that is inflationary. Look at coffee. For those coffee drinkers out there, this is the daily move on coffee in the last 2 weeks. That's a big move. We're talking from 190 to 230. Think about percentage-wise what kind of percentage move that is. Incredible. And then obviously cocoa here, chocolate, basically at all-time highs, and look at that move. So again, you can go to a lot of, there are a few, by the way, there are a few commodities that are not participating yet, and I say yet because I think eventually they probably do. Take a look at sugar. Sugar is getting pounded down here, although I am starting to get interested in this chart for a potential buy, maybe down in this range. And then a couple others that I'm actually liking here. If you look at like corn, corn's an interesting one. Corn is making a pattern formation near the lows of its chart that intrigues me. And what I look for here, see these lows right here? Right here? So basically you have, this is a V bottom with a cup, like kind of a cup and handle, right? Cup and then handle. And so if you can break out above this level on corn, it actually should get a pretty impressive move to the upside on the charts. And again, we can look at wheat real quick. Just we have another minute or so here, a little less than a minute. But nonetheless, if we look at wheat, what do we see on wheat? Wheat, same thing. It really is at the lower end of the range. You can see how low it is, but it does have the potential for a little breakout here. And again, just to show you a quick trend line, draw it on, we draw a trend line right down. Keep an eye on this trend line right here. We get above this level, right? Right here. We can break above here. You should get a nice breakout to the upside on wheat. So listen, a lot of commodities have run. There are still a few that haven't. Keep those on your radar. I'm not going to chase coffee. I'm not going to chase cocoa, right? I'm not going to be chasing those as buys. If anything, I'm looking to short those moves. But there are other ones that are potential plays. All right. The question here, guys, all right? So the question is, let's see. The question to go into Monday, tell me something that you guys think is unbelievably important from technical analysis. Is it moving averages? Is it VWAP? Is it trend line analysis? Anything, MACD, RSI. I want to know what's something that you've learned that you're like, wow, that is powerful. That is a powerful technical analysis technique, all right? Write it underneath the stream on YouTube or on Twitter. Don't forget to make sure to follow those socials or you are automatically disqualified from it. And let's do a quick batter up here. Let's see what we got.